Afternoon, how are we all doing? Sorry I'm late. Doing stuff. Stuff. Just general stuff. Afternoon, Evans, Amy, Harold, Crom, Virginia, Alex, Kennelly, Ian, Day Trader, Brian, JC, Peter, how are we all doing? Afternoon, Neo. So we had a bit of news this afternoon. The unemployment claims, 198 on a forecast of 210. Not a massive amount of movement. Indices all pretty quiet. Little bit of a uptick, not a lot. US dollar, not really any movement at all off of the news. So just a bit meh, really. All a bit meh. Pound's pushing up again against the US dollar. Euro's pushing up nicely against it. Aussie's pushing up a little bit against it. So although that was a positive news, doesn't seem to have had any impact. So we got Powell speaking later and home sales this afternoon. Unlikely home sales will do much, and it's unlikely the markets will wait around for it. But Powell might say something later, either to rally it or dump it. Powell just says whatever the hell he likes, whenever he likes. So we'll see what happens there. We've got Harker speaking later, kind of into tomorrow, really. But that's it for news today. Apart from that, today we've had Netflix stock surge. American Airlines have posted a loss. Not a lot of other news came out this morning. Nestle missed their targets. Whoopee. Poor old coffee. TSMC, biggest drop in profits in nearly 5 years. So that's Taiwan Semiconductor. That's that pre-market that we had today. So that was a big miss. Nokia cutting some jobs. Trump leads Biden in key states as voters fret over the economy. No. Not putting that loony back in charge, surely. Criminal. Apparently. Yeah, nothing much else today. Yeah, it's all just meh today. So, DAX this morning, very nice clean break today with the opening range breakout strategy or the hedge strategy. You didn't get hedged this morning. You just broke straight to target, pulled back, and then we've chopped around and done nothing much else today. So, but yeah, nice $1,300 profit this morning off of the DAX. US indices so far today, pretty tight session. Considering we've had a lot of earnings, there's not a lot of movement, as you can see. So we're up at the highs of the day at the moment. But yeah, nothing much happened today. It's just been a bit crap today. I think the market's still just waiting to see what happens with Israel. There's no more news on that. So until we get some kind of indication of what's going on over there, I think we'll probably just rotate. So we will see. Afternoon, EMAC, Alistair, Gregors, Julio. Hopefully they won't move like yesterday. Very erratic. Hope not. Lucky to survive yesterday. Sometimes you just can't do anything about it. Afternoon, Marco. So we'll have a look at the ADRs and everything in a bit, of which, what the hell's going on with the ADR dashboard? Weird. What happened there? But all the data disappeared. Odd. That EuroCAD just hit. Yeah, EuroCAD's, well, it's not just hit in the last hour. Something weird going on there. That was not updated. So we'll watch the opens. We've got 2 minutes to go. Quick look at where we are with them. S&P, the Dow. We're down at these lows on the Dow. So we broke out that high. This area here, we've tested this quite a few times and rejected it. We're rejecting it, it looks like, again. So this seems to be holding this zone here at the moment. So maybe push up. If we break down below, if we go south today, obviously there's the pre-market low today, but there's this wick, this little wick here, which is pre-market low. Other than that, there's really clear air all the way down. So if we do break south today, there's not a lot to stop this today. Upside obviously would be yesterday's high, which is beyond ADR. So upside's really easy. It's ADR. S&P, very much the same sort of thing. Upside, we'd be looking at ADR, which is ADR 125, which is yesterday's high. Downside, it's either down here or here. So on your way to ADR. So there's no real good support resistance apart from the pre-market low for any of the indices today. Same with the NASDAQ. Pre-market low, which is last week's low. And then we fall all the way back down to there. Upside, yesterday's high, which is beyond ADR. So if we break north, we could just run to ADR. If we break south, we're looking at the pre-market levels. We'll see where we go. 17 seconds to go. Oh, bloody hell. Just filled my water bottle up. Getting old, see, it takes quite hard to lift. Got to start drinking bigger cups of coffee to make the stock market move up, yeah. I haven't had my my espresso this afternoon. Still awake, though, which is good. Afternoon, Dion. One hell of a shark fin on the CAD Swiss 4-hour. What, you mean that? Or just an extension? Yeah, I mean, the RSI is just massively extended on the 4-hour and the CAD Swiss. All the Swissies rallying like crazy at the moment. Safe haven runs. So we will see if they continue. We're still not sure what's going on with Israel. So almost broke long on the NASDAQ there. Long on the NASDAQ. Long on the no, I'm not long on the S&P. Just about to. Just trying. Dow's stuck. Fair bit of volume coming in, volatility, but no breaks yet. Market is thinking. So all these earnings we've had released so far today are all very hit and miss. We've got some big hits, some big misses. So across the board, bit of a mixed bag today. The main one obviously was NASDAQ, was Netflix yesterday aftermarket. These ones this morning haven't really done a lot. We haven't got a lot of aftermarket today. It all kicks off really next week. Next week's the first proper week. We start on Tuesday with Google and Microsoft. So all like minor stocks apart from Netflix, really. Long on the S&P. Long on the NASDAQ. Not really able to make any breaks though here. I've been working on a new strategy this morning as well. Very interesting. Afternoon, Jerry. I'm talking about the chart in general. What? Oh, that. Yeah, that shark fin. Really bad shark. It's like a child's drawing. That is a shark fin. Steve Mauro, eat your heart out. This is going nowhere fast today, isn't it? Don't quit my day job. No, definitely not quit my day job. Yeah, so I was working on a new strategy this morning. It's a strategy I left a long time ago and picked up again this morning. I built a quick EA to test it, which is basically a kind of. It's the reason I picked it up again was because of what I've done with the stock index hedge EA. It's an old hedging strategy that I looked at years and years ago, and it was too complicated for me, so I gave up with it. So I've resurrected it and built an EA for it this morning. I tested it on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 instruments. And that's the result on 10 instruments. Not bad. It does take a fair bit of drawdown, though. It took 30% of drawdown, and that was just once. But on average, it was averaging at 15% drawdown, which I could live with. 15% of drawdown, which is what I kind of live in anyway. But yeah, 450% return. This is 12 months, October last year until now. Yeah, so I'm going to keep working on that. That's on aggressive mode as well. That's kind of really aggressive. As you can see, very aggressive. But it's a trend. It's a trend following hedge strategy. So what you get is these outliers here. So if you take these outliers out of the equation, which is what you would have to do when you're testing, take those out of the equation, probably that one as well, just to flatten the equity curve out. Because these basically are when the market goes parabolic or squeezes, if you like. So this is you taking advantage of squeezes. So basically the strategy is a trend following strategy. It uses a moving average cross exit. So this is basically where the market is just going like that. And of course, dependent on the lot size you have on, and in these cases it had that one, it didn't have much lot size on. That one, it had a lot of lot size on. You can see the lot size. Oh no, you can. Sorry, scrap that. This is the lot size. So it had a lot of lot size on there, a lot of lot size on there, a lot of lot size on there, and a lot of lot size on there. Yeah. So these are going to happen. So they are going to happen in the real world. And if you just let the EA run, this is what it will do. But I would take those out of the equation and look at it as a more of a smoothed curve. So forget the big wins. You'll probably drop it down to something like 300% return instead of 450. I think it's 450. Yeah, 457. So not bad. To be continued. Right, hedged on the NASDAQ. NASDAQ's going short, hedged on the S&P as well. So let's look where we're going. The downside. So yeah, nice. Pre-market low today is 5R to the downside. So that looks pretty good for a short. Fair bit of distance to ADR. But we have got last week's low there, look. Which you can't quite see. So that's last week's low. Yeah, so we opened up and we basically rallied away all that week. So that is the previous week's high. Well, it's not actually, but that's the previous week's high, but it's a high of the previous week, which we used as support. So that's a really good level for a TP. Happy with that this afternoon. So downside, I'll look for a flush back down to their 5R basically. I'm just going to move that up slightly, just in case we get limit orders triggering. We're not going to exactly hit to the pip. Upside, we've got ADR there, just below that high. So I'm going to come down just below that high. There. Let's see where we go with that. S&P. That's tricky. So it's very similar. So this is that low. Can't see. This is that low from the last week and that previous high. Yeah. Same principle as the NASDAQ. It's going to be very similar. The difficulty here is ADR is much, much lower. So ADR is down there below that weekly, and the pre-market low is only 3.5 R. So do we go down to here or try for that? That's the question. I'm going to go for the latter, for the longer trade. And I'll leave the TPs to the upside at ADR. So see if we can get an ADR hit today. So hedged on those two. Dow Jones long. Blimey, this is a mess today again. Goes like this. Some weeks you just literally every day it's just like money, 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 money. Other weeks it's like pulling teeth every day, and it really makes you work for it. Nothing you can do. Just got to take the cards you dealt. So long on the Dow, and see if we can get to our hit out the upside on the Dow. 2.2, that'd be 3.5. Hedged in 2.5. So if the Dow hits target, I can close out the Dow, take the money from the NASDAQ, from the DAX this morning, and close those two off in a win. So fingers crossed for the Dow. See where those go in a minute. We'll have a look at the ADRs. Do you think you may be suffering from strategy hopping? I'm not hopping. I'm just when you've got systems and strategies, yeah, this is the thing that I never get about people, right? People come into the Telegram group and into the YouTube channel and they go, I'm a successful trader. I've got 3 funded accounts. I've been trading a strategy for 5 years and it's absolutely fantastic. What the hell are you doing in my Telegram channel buying EAs then? Some people, when they've got a successful strategy, and I'm not saying this is what these people are like, but some people, when they've got a strategy, they work, right? I have nothing to do. This morning, I traded the DAX. I was in here with you guys this morning, traded the DAX. Within 30 minutes, by 8:30, I was done. I'm done, right? So what do you do for the rest of the day? Development, strategy development, build EAs, muck about. Basically, that's basically what I do. Other people might go off and do other things. I do go off and do other things. I don't spend my entire life in front of the computer, but just looking at stuff, looking for other edges. If I can run this strategy along with position trading, along with another strategy, along with another strategy, along with another strategy, the more strategies you have that work, the more potential you can make, although you obviously need more capital. So just not system hopping, just, you know, there's 1,000 ways to make money in this market. If you've got diversification of strategies, you're going to do a lot better. So if position trading is not working and scalping 5-minute opening ranges is, this pays for that. If they both work at the same time, I have phenomenal months. If they both fail at the same time, I have awful months. But if you have 3 or 4 strategies that you run, like I run the S&P 500 pullback strategy as well, that works really well when the markets are trending. They're not at the moment. So you've got to have diversification. I just have a lot of other strategies I've used or looked at in the past that I've discounted because I went, no, I don't like that. I want to try this. But now I've got not much further, but, you know, just now I'm using systems and strategies that I've been using for years. I keep doing things like this with the stock index hedge EA and going, that other one might work now. Now that I know what I know that I didn't know 5-10 years ago, I can apply my knowledge now to what I used to think was crap, but it might not actually be crap. It might have just been that I was looking at it in the wrong way, because back then I thought there was a holy grail. Now I know there isn't a holy grail and the market's completely random. So there is actually a way to make money out of that. It's just you've got to ignore this, this, and this. And you just bend it back to what you know works. So it's a hedging strategy, basically. So it's an always in the market hedging strategy that runs the trend. So if it gets into a trend, if the trend fails, it hedges it back, it hedges itself and waits for the trend to restart. And then it gets out. So, very simple. It's a very simple strategy. That's probably why I didn't like it, because I was under the impression back then that, what do you mean you've only got one indicator? That can't possibly work. Actually, that's exactly what you need, one indicator. It's in here. But anyway, I will look at that in more detail, but it's got a hell of a lot of promise. The reason I did this test this morning was to break it. So what I tried to do was break it. So I ran it on this and it made 11 grand. I ran a system parameter permutation test with 300 permutations and they all passed. So I ran it on the Swiss and it made more money and all the permutation tests passed. So I thought I'd run it on a yen pair because they're hideously volatile. It made money and it passed the permutation test. So then I ran it on the New Zealand dollar and the Aussie because that goes sideways most of the time. It made 14 grand. That doesn't trend. It still made 14 grand. This is over a year with very, I mean, this is running 0.1% risk. It's no risk at all. 21 grand on that. Yeah, I was trying to break it. Let's try the Swissy because that goes nuts, doesn't it? As we know at the moment, when there's a safe haven run, the Swiss franc goes nuts. Made even more money, which it should do because it's a trend strategy, obviously. When the Swissy gets in a trend, it milks it. So yeah, just I tried to break it basically. Some of the, look, euro odd didn't do very well. Pound US dollar, 145 grand. What? That's not right. Ah, right. Yeah. So this is the outliers I was talking about. Yeah. So you take these out of the equation. Yeah. And look at the equity curve. And it basically will do something like that. That's sideways up. So sort of be something like that. And then we get to there and it's something like that. Yeah. So take these out of the equation and it's profitable. So it's not going to be 145 grand. If you look at it, look at the trades. Yeah, we had a 60 grand winner there. Can't delete them out, can I? I need a delete function in here. So take that 60 and take that 46 out. Yeah, you'll be left with about 30k. Removing the outliers. So yeah, not that down to, like I said, 350%, not 450. Oh, God. Dow's failed at the highs as well. It's going to be one of those days today. I can see it coming. Right, ADRs. 2R on the NASDAQ short so far. Good. NASDAQ short. Yeah, so if you didn't get triggered on the highs, I mean, look at, you should have really got into that. Yeah. I mean, if you offset by ever so slightly more than me, then yeah, you're 2R to the downside. You're done on that. Ever so unfortunate that high look on both of those. You watch this scream now up there and take the Dow with it. That'll do me perfect today. We'll see. Come back to it in a minute. See what it's doing. Emperor bought the SIHEA yesterday. How do I fix invalid stop loss TP issue while using the EA is unable to place buy stop or sell stop orders? Don't know. It could be that your broker doesn't allow the lot size it's trying to calculate. Test it in the back tester, and as Harold just said, use fixed lots as well. If you use fixed lots, mind you, that's invalid stop loss TP has nothing to do with the lot size. Well, it can be to do with the lot size. It can be to do with a lot of things, that error. That's one of those errors. Sometimes in software you get an error which is so vague and it could be to do with so many things. It's like a little bit of a rabbit warren. So that's one of those. Invalid stop loss or TP. Why? So when I get that when I'm doing development, I basically remove the stop loss and the TP so that it doesn't use one and it just enters a trade. And sometimes it still triggers an invalid stop loss or TP, even though you're not using a stop loss or a TP, which means it's got to be due to lot size. When you then flick to lot size, it doesn't produce the error. So what it is actually doing is it's something to do with the lot size it doesn't like, but it doesn't tell you that. It thinks it's an SL or a TP error, but it's not. It's a lot size error. Try that. I love MT4, but some of the reporting and some of the processing that it does, it just kicks back stuff and you just look at it and go, what? It's a big, complicated bit of software, and there's a lot of functions in it that you have no control over, and some of the reporting is just terrible. So try that, but do it in the back tester as well. Test it in the strategy tester. If it works in the strategy tester, it should work. What is the S&P pullback? That is to do with the market reverse alerts EA. So if you go to the manual, or is it a set files? I think it's the set files and test results. There's a link at the bottom here. There is also an S&P 500 strategy, which is here. I'll put it in the link in there. This isn't working at the moment. Yeah. So basically, it's a trend strategy for the S&P 500, which works using RSI and the market reversal alerts indicator. So the market reversal alerts EA trades it. It's all explained there. The set file links are there as well. But it's designed to work in a bull market. Yeah, which is where we spend 95% of our time. The S&P is a trending instrument. It's manufactured to go long. This will also work with other indices, but the S&P is manufactured to go long, yeah? Because if it doesn't, it means that businesses are not making money. And if businesses aren't making money, they fire the board members and put board members in charge that do make money. So the S&P, you will always find, goes up. Yeah. So back here in 2013, we were trading at 1605. If you go through year by year by year, we're up at 2,100. Then we're up at 2,500. Then we're up at 3,000. Then we're up at 3,800, 4,600. Yeah. It will keep doing that because businesses, these 500 businesses, their job is to outperform expectation and deliver for their stockholders. They do not report negative earnings. And if they do report negative earnings, they do something about it and make themselves positive again. So if a company starts moving so badly that they just go negative returns when we get the earnings season, as we are at the moment, that company drops out of the S&P 500 and gets replaced by company at 501. Therefore, making sure that the index continuously moves up because it only contains stocks which are profitable. Therefore, they go up. So you just buy the pullbacks. However, that strategy was created in 2021 when everything was normal. Well, we thought everything was normal. Yeah. So back here. Right. So what happened was in 2020, we had COVID and we were like, that was the biggest drop we've ever had, ever. And what we were expecting was to return to a bull market. What we actually got, when you look at what a normal bull market looks like, what we actually got was a parabolic bull market while businesses were underperforming and releasing negative stock earnings. However, for some reason, it carried on going. People kept buying stocks. They kept putting money into the stock market. So what we're seeing here and what we're experiencing now with this bull rally, this bull market, or bear market, bear volatile market, is the fallout of this market being artificially inflated. We are potentially running back into a normal bull market situation now. However, as you can see, we haven't quite got started properly yet because we've had Russia and now we've got Israel. So it's one of those strategies which in a normal world, which we've had for the last 20 years, even when we have crashes, yeah, even when there's what they call stock market crashes, you still buy the dip, yeah, because the companies will recover. They will recover or they will be replaced, and it will go up. Yeah, it doesn't go down. It just doesn't go down, right? So you just continue to buy the dips, basically, and that's all the EA does. That's the strategy. Basically, it's what Warren Buffett does. In a nutshell, Warren Buffett trades the S&P 500. S&P 500 returns 8 to 12% per year. Most years. Not since this nutty thing happened, which we've not experienced before, but that's what it does in general and has done for decades. So basically, if you've got billions, all you do is every time the market comes down, you just buy some. And if it comes down more, you buy a bit more. And if it comes down more, you buy a bit more. And you just keep buying it until it goes back up again, because you've got billions and you can keep doing it. Yeah, we haven't got billions, so we have to use much smaller risk. But that's the strategy. It's very, very simple. Larry Williams did it. Warren Buffett does it. There's an awful lot of very successful traders that do the same thing. This is where the term buy the dip comes from. But it doesn't work in a bear volatile market. This is the first bear volatile market we've had that's lasted more than 6 months ever. Not experienced, never happened before. So how do we come out of this? No idea. We've never had it before. Same way as we never had COVID before. What the hell was that? Yeah, we don't know, because this is all uncharted territory. We've never had to recover from this, just as 2 potential World War III candidates kick off. This market is not normal at the moment. We're in a very, very different world to what we had pre-COVID. So you've got to adapt. And again, this is why I'm looking at different strategies, because some strategies that used to work or didn't used to work may well now be completely different circumstances. This is why you have to test all strategies across different market regimes. You need to test it in a bull market, in a bear market, in a range-bound market, with a high ADR, with a low ADR. You have to test it across all of those different scenarios. If it comes out profitable, pick it up and place it on another time period that you've never tested it on before, and let it run and see what happens. That's how you do proper back testing. You've got to test across every market condition. And if you get results that come out like that, with system parameter permutation tests for all different scenarios, it's robust. That's basically what everything I do is based around, robustness, because it's got to be able to carry on going in the future when the market changes conditions, which is why we are mean reversion traders, not trend traders, because the market spends 80% of its time in mean reversion and 20% of its time in the trend. So why would you possibly pick a strategy that only works 20% of the time? Doesn't make sense, does it? However, that strategy I showed you is a trend strategy. However, it hedges, so it doesn't take losses. So therefore, it's a different approach to trend trading. In the case of, we don't care if the trend reverses. Not a problem. We'll jump on the other way. So we're still trend trading, but we are mean reverting within the trend by hedging our positions. So it's something I never thought of using that thing for before. So anyway, there you go. That's the S&P strategy in a long-winded explanation of it, but hey. Hamza, a lot of size restrictions, hedging restrictions, margin restrictions. Yeah, there's a lot of crap that goes into different brokers, and all of them can cause problems. This is life. Hedged on the Dow? Yeah, hedged on the Dow. So total nightmare today, whitewash. This is a nightmare today. I reckon we'll get some orders off of that. I'm going for that low today to the downside. So roughly 3.5 R to the downside. Upside is ADR, which I'll leave where it is and just watch price action. Nothing much you can do today. Hedge day across the board. nasty, 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 choppy mess. All indices just wiki open. Same as we had yesterday, isn't it? Managed to get out yesterday's though. Still banked 1.3%. No, sorry, 1.3%. Not sure I'm going to do that today though. Today might be a loss, but we'll see. Right, ADRs. Waffling. Euro odd. ADR hits the upside, 125 we're on. We've pushed up very, very hard on the Euro against the Aussie. It's the Aussie that's caused this problem. So if you look at all the Aussie pairs, they all came down this morning. Aussie New Zealand has recovered, but everything came down Australian dollar, and that was basically off the back of the unemployment rate. So the unemployment rate came down. Existing home sales is about to be released, 3 o'clock. Let's just see if we get any action on the indices off the back of that. $3.96 on a forecast of 3.89, so as expected. Not really doing anything. I think that might be a data feed actually, but doesn't seem to be doing an awful lot. All the terminals just frozen. That's what it is. Either this is doing an absolute massive amount and I'm missing it, or it's doing nothing. But both terminals just froze there. So there's obviously a big packet of data just came through. We'll probably get a bit of a whippy out of that one, I think. Let's have a look. Comes back to life. Yeah, a bit of a push up on the US. So it's 3.96. So it is positive. But if you look at the previous, it's 4.04. We were forecasting a drop. We got a drop, but it wasn't quite as bad as we thought. But it is just existing home sales. It's nothing to do with the economy, because the thing that you want to watch for the economy is building permits, because building permits, which is what we had yesterday, 1.47. Building permits basically mean jobs. So if you have a building permit, it means you're going to build something. If you're going to build something, you're going to employ people. Employment helps the economy and brings down unemployment. Existing home sales just means that this bloke over here that's got a job is swapping his house with this bloke over here that's also got a job. Doesn't affect anything. So we don't tend to get a lot of movement off of building permits. The market will obviously do what it wants to do with the news, but looks like this terminal is just totally frozen. I'm just going to rescan. So Euro odd, obviously everything came down today against the Australian dollar, or rather the Australian dollar came down today on the back of that news. It is positive news for them. It's the, whoops, wrong one. It's the unemployment rate. So if the unemployment rate comes down, that takes off pressure for inflation a little, but it means you can put your interest rates up. So typically that is a bullish figure and will increase the currency. But today they decided to dump it. So potentially you've got a reversal opportunity up here, but as you can see, we rallied up there and literally gone nowhere in London. It's Christmas tree up here. It's red, green, red, green, red, green, red, green. Just not going anywhere at all. So Euro odd is a mean reversion opportunity. It's extended on the hourly as well. We'll look at the RSIs in a minute. But reversal alert. You've had a few reversal alerts on this morning. And it is just literally going sideways. So nothing you can do with it. If you're going to short it, you're looking for it to push back down to there if it's going to rally back up again, but not a great entry. Euro CAD just hit ADR. You haven't had a reversal alert on that. That's a big strong push by the euro up to there. Look, so not really a decent entry on that one. Euro pound, again, same thing with this one. Euro's strong move to the upside. We've just gone sideways since we had that rally up into 125, almost got 150 ADR. So we hit ADR there. This is the first reversal alert. Literally 20 minutes ago, 25 minutes ago was the first reversal alert you've had all session to go short. but it's part of a not going anywhere type move, so not a great one either. And Euro New Zealand, slightly better. I've already got sales on this on the H1M5 mean reversion, so this is pushed up. Obviously, New Zealand dollar weak with the Aussie dollar, so both of those weak together. So this entire move here needs a pullback now. So we pushed up for 3 days solid, went nowhere, no profit take move on it. So these longs are still long. We just accumulated and added more long positions. So this entire move here is full of longs. So as soon as we start to take some shorts and we get out of some of these positions, we'll get a big, quick drop down on this. So I've retargeted. First position was there, second, third, fourth one got added this morning. So I've targeted them back down at this propulsion gap, which is this accumulation, which is a 50% retracement if it's going to continue that way. If it's just going to do an A-shaped recovery, then don't care. I'm out anyway. Pound odd. That was an ADR hit this morning. That's already played out. This one came off ADR very nicely this morning and has retraced all the way back down into propulsion, which they've just added to. So that one you've missed. RSIs, there's loads of them. Lots and lots of RSIs today. Let me just quickly see what's going on with the indices. Absolutely nothing. Look at it. What a mess again. Shocking. Totally sideways. This is what we had yesterday, wasn't it? Huge sell, entice all the sellers in. Huge buy, entice all the buyers in. Get those sellers out. Huge sell. Literally, it's all it was doing, wasn't it? We were having these like little bodies and these huge wicks, and then you get another little body with a huge wick to the downside. Just wicks everywhere. No direction. Market literally has got no clue where it's going again. 2 days on the trot. Brewing. Something's brewing. Something's coming. So yeah, we'll see if we can get anywhere. Depending on how fast it moves when we do move, if we do move, I might readjust these targets if I see any price action, but we just need to let this play out today and see where it decides to get to. Can you talk a bit more about the new strategy? Is it a variation on the market reversal? No, it's got nothing to do with market structure, market reversal alerts, or anything. It uses moving averages. It's a moving average strategy. I will explain it in more detail when I've done a bit more testing. But basically, you take a trade when you cross a moving average, and you use another moving average to exit that trade. So it stays in based on moving averages. Nothing to do with crossovers or anything, but it's just a reason to get into a trade. You could use anything. I've tested it with how many did I test it with? Whoops. I tested it with 5 different moving averages, and they all work. So it doesn't matter what you use, to be honest. But basically, you use, and again, this is something that's different to the strategy. You use a multiple of ADR to decide the hedge. So it runs on the 4-hour time frame. Yeah, so this is not an intraday strategy. This is a swing strategy, 4-hour time frame, almost pretty much daily charts. So you'll be in positions for days, weeks. You'll be in hedges for weeks with it. It's a long-term strategy using wide ADRs to get in and out of swings without getting hedged. So there's lots of variations of it as well, ranging from 0.84% drawdown to 95% drawdown, ranging from $280,000 in profit to about $2,000 in profit, depending how aggressive you want to be. So they all work. It's all everything works. It's just, you don't want to go too mad on it. But I'll explain more. I've got more testing to do. today was preliminary testing. I've done many preliminary testings and thrown them away after I've done proper robustness testing on it. So don't get too excited yet. But it's kind of something I think might replace position trading. It's a very similar concept, but using hedging rather than using drawdown control. Similar, but not in the way you would think. Anyway, Aussie dollar Swiss extended on ADR on the 4 hour to the downside. Only just though. This is a double bottom on last week at the moment, which is holding very nicely. If you look at these wicks on the 4 hour, we're holding very nicely here at the moment. Sellers can't get through. Buyers are just buying up everything they chuck at them at the minute. So event through, guys, and they're going to turn into buyers. So that's looking pretty good down there at the moment, as you can see. But this is the Swiss franc. Yeah, so at the moment, we've got panic buying, more panic buying. So basically, we want to get into the Swiss franc over the weekend. Oh my God, they've just blown up a hospital. This is World War III. Oh, maybe it's not. Yeah, so this is all Swiss franc safe haven runs that we're getting at the moment. So you can't say for sure if this is going to bounce here. Technicals have got absolutely nothing to do with fundamentals. If this war kicks off and nobody wants to invest in the stock market or anything else, and they want to pull all the money out of their FX investments, they're going to put it in the Swiss franc, the US, and the yen. This is going to go down. So just be careful with the Swissy. Don't get too over leveraged and certainly don't oversize on it. So it's in a good spot at the moment though, where we are technically. So if we do sort of take the foot off the gas with the Swissy, we'll pull back on this move, probably up into here. We can see my targets are there. Aussie dollar, New Zealand dollar extended on the 4 hour as well. So that's real extension up to the 80. We looked at all these this morning, but you know, 80 RSI extensions, very rare. You don't get an ATR extension reversal. Yeah, it's a big move to get extended above 80. You've got to have a serious amount of sustained buying and large volume as well. So it's it looks to me like this is potentially another leg down. So, but equally sideways. As I said, we spend 80% of the time in a range. So if this is a trend starting, that's where we'll be going from. If it is a reversal in structure and we're going to stay range bound, we will pull back before we test the highs of the range. Either way, looking for it to come back down. So Aussie, New Zealand, pretty good. CAD Swiss, this thing's off the charts at the moment. Again, huge batch of sellers, accumulation, huge batch of sellers. The guys that entered short there haven't profit taken yet. So this entire move is a short. They're going to want to get out of a good half of that in the way that they did there. Yeah, so it's an A-shaped recovery basically underway. We're looking for a pullback basically on that move. But if we do get down into these lows, we're going to bounce off either 50% or 38 or 61.8 or something like that. We're just going to bounce off and then we're going to continue down potentially. So at the moment, my average is there, which is a fair distance away because it's quite tricky to get into this one as well. So looking for another entry, but need it down here somewhere, down at this monthly low or the previous month's double bottom. So this area down here is a good area to buy from, but this thing's just nuts at the minute. Massive extension, 16 on the 4 hour. That's really low. That's this sort of low. You can't see it behind my head there, but that is also another one. It's not often we get down to these levels. Yeah, when we get below the 80s, above the 80s and below the 20s on the RSI, these are parabolic moves. These parabolic moves, most of the time, get a V-shaped recovery off of them. Look, yeah, at least a 50% pullback, if not a complete V-shaped recovery. Yeah, so when you get down to these sorts of levels, it's not often you're going to be able to withstand any more movement. You have to push back, because this whole lot of selling, basically everybody that started selling up here, they're still in it. Yeah, as soon as this thing goes like that, they're going to panic like crazy and they're going to buy to get out their orders, and it's just going to ping back twice as fast, twice as hard. That's what it does. Look, bang, big strong move up. So waiting on this one. However, obviously, because we've got the situation with the Middle East at the moment, you know, if they're going to buy more Swiss, they're going to buy more Swiss, and it is just going to carry on down. So, but it will get to a point where they will stop. You can't just you don't buy forever on the fact that something might be kicking off. It will kick off, and then once it's kicked off, you won't need to do the safe haven run anymore because you're in it. So the only way to get now is out of it, which means you get a reversal. EuroCAD, big extension to the upside. We've just broken that weekly high there. It's not massive, this one. It's better on the hourly at the minute. So you've got just about an hourly RSI extension. No 5-minute reversal alert yet. I don't think I'm going to get into this one because RSI is not extended now. We haven't had a reversal alert on this because for the last hour and a half, 2 hours, we are just putting back on this massive bull rally. But it's an ADR hit. It's an RSI extension. So good short opportunity there. Euro pound is extended. That's already coming off. We've looked at this because this was the ADR hit. So that's just coming out of extension there. That's on the 4 hour. Sorry, that's not an hourly. That's 4 hour RSI. So big strong move up at the monthly high, getting rejected. So sellers stepping in up here. This could just pull back into this weekly high and bounce from here though. So not necessarily going to come down too far. Euro and the pound really tricky at the minute. As you can see, totally range bound. As we quite often are with the euro pound. So you sell it, buy and sell any direction. It doesn't matter. It's very rare that you will find a move on this doesn't rally that, which means that you don't get a lot of push and pull. You get a lot of movement up and down, but there's no real strong squeezy moves on it, because when something good happens in the Eurozone, it affects the pound because we're the biggest trade partners, and vice versa. So it doesn't matter which way you really get into this one. Take any extension, you're likely to get out of it very easily. Euro New Zealand. We know about the New Zealand dollar, absolutely floored at the moment, the New Zealand. So again, we looked at this one already. It's a 125 ADR extension today. We're just coming up into this accumulation. So we should find some sellers starting to kick in. As soon as we get some sell moves started, we'll probably find they start to scale out of that long. And obviously we could just get a V-shape, an A-shaped recovery. Bear in mind, this is in a downtrend at the moment. So you got a high, low. This would be a lower high for the next leg down, potentially, if we're going to go that way. There's not really anywhere for the New Zealand dollar to go but up. It's been coming down for a couple of weeks solid. So you look at it on the daily, it's like 1, 2, 3, 4, 5, 6, 7 days solid, straight up. Yeah. Not often you get a rally of 7 days solid without a pullback. And this is the first one we've had without any pullback whatsoever. So when that's not the first one ever, but I mean, it's the first one this year. So equivalent to that. Yeah, A-shaped recovery out of that. At least you're going to get this, and this is the whole purpose of position trading. Demonstrates it very well on this chart. There's my average. Okay, so my average is 150% roughly of ADR. All I'm looking for is just a tiny little pullback. Couple of days, just a couple of days where you sell it. You get out your positions. That's all you need to exit after a rally like this. Just a couple of days of pullback. But normally you get more. Normally it doesn't do a couple of days of pullback and continue. Normally it will do something else because it can't sustain It's just not, there's just not the money and the liquidity in the market to sustain rallies past, usually 5 days is pretty much it. A week up, you need a pullback before you can start a new leg, which is why weekly candlesticks, you find you get green after green after green after green, and everyone goes, this can't go up anymore. It can, because it's pulled back before it's gone up. It's pulled back before it's gone up. The lower time frames, daily and below, we see the pullbacks. Weekly candlesticks, you don't see them. Just green, green, green. Look. But look, that looks like a huge parabolic move. But within there, you had a massive push down. You pushed up, massive push down. Pushed up, big push down there. That was a parabolic week. But look at that. That next candle, which is also still a big bull candle, look, it pulled back more than 50% of the previous week's move. On a lower time frame, you'll see that. Mean reversion. Even though that looks like it's trending like a lunatic, there's mean reversion plays in there all the time, which is why mean reversion trading in a trend works, as well as mean reversion trading in a range. There's a video on that on my website. You're in New Zealand, so that's massively extended, we know. Again, 2 weeks solid up. Pull back. If it wants to carry on, let it. But that profit take move will come. Pound Swiss as well. Swiss franc move. We got a very nice hammer just gone in down here. This is a 3-bar reversal forming, which is a pull down, pause, push up. Yeah, so down, pause, up. So potentially this could be trying to form a bottom down here. So if you look at it on the hourly, you'll get a reversal alert. You're just about to get it. Just about to get a reversal. Again, this is what it's reversal alerts on the time frame below is showing you what's happening above. So the hourly reversal alert is showing you on the 4-hour we're put the brakes on. So looking for a push back up on the pound Swiss, at least back up into this accumulation. But this is the original move from last Friday, where they started buying the Swissy into the weekend. So at least you should be looking for a push back up into there, if not completely undoing this move. This is a safe haven run. If you have to come out of the safe haven, you undo the original move, which is where the return to origin, you'll hear people talking about a return to origin move. That's the origin of the move. That's where you return to. So if it's just a temporary move, V-shaped recovery is return to origin. If it's a safe haven run and you no longer need that, you pull all the money back out again, you return back to where you were. But at the minute, we obviously don't know what's going on. We may get some more Swiss franc buying coming in. So, but that's extended on the 4-hour as well. So nice opportunity for a pullback there. Pound New Zealand, same thing. New Zealand dollar getting absolutely creamed at the minute. I've got positions short on this at the moment. I think I've only got one now. Yeah. So first entry it's this morning, taken on the H1 M5 mean reversion this morning. We've had the hourly reversal alert, so hopefully this is just turning into an M pattern reversal. I'm looking for a push back down into that propulsion. Going to watch that high though, that ADR, that propulsion there. It's not a lot of profit, but what I don't want is market structure to continue as it is. So that would be the exit. I'm going to push it down to there, but we may well get a bounce from that level there. So watch that one, pound New Zealand. All the New Zealand dollars massively extended. So these are all 4-hour extensions, absolutely collapsed. But on the hourly, we've had lots of signals on the hourlies as well. But just absolutely getting run over, this New Zealand dollar and the Aussie as well. It's just completely lost all power. It does this. It's done it before. It's done it, I think, last month. And then all of a sudden it flies for weeks. It's very bizarre what's going on because they're commodity pairs. So you get a lot of money again flooding in and out of them in one go. So they're just volatile. The other obviously thing you've got with this is the oil price. That is potentially going to continue to rise, which would give this a little bit more potential downside. So at the moment, if you look at oil, we've finished our pullback. I was going to say that gap fill we looked at this morning, yesterday rather, They refilled it properly this time. Came down into that propulsion move, which started that leg up, and they bought it back again. So that's what I'm expecting to happen and continue. So with the New Zealand dollar CAD, obviously, if we do get a rally in that oil price, it's going to keep the pressure on the New Zealand dollar CAD to come short. So it's going to take something pretty strong to get that back up there. But oil obviously does normally move very, very rhythmically. So every time we get a dip in oil, New Zealand's got a chance to sort of push up. But that's only just extended on the 4 hour. Was massively extended. And again, we didn't get that pullback out of the 80 because of the oil price. So again, you see how everything is tied into fundamentals. Yeah. Technicals, indicators, lines on your chart mean nothing when a war's kicking off. Everything changes. Directions change. Fundamentals change. Where your money needs to sit changes. Everything becomes different. New Zealand dollar Swiss, big extension to the downside. Swiss franc, that's still massively extended. Same thing. Rally into the Swissy. No let up. New Zealand dollar, massively weak. Second rally into the Swissy. Fundamentals. Doesn't matter what that's doing. If this thing is going to be sold down because the Swiss franc's being brought up, that's what's going to happen. It is approaching a very nice area of support where we are going to find some limit orders, and it is extremely exhausted. So, there's only so much you need to buy before everyone goes, all my money's in the Swissy, I can't buy anymore. They can only pull it out. We will get the pullback at some point on that one. That's massively extended. 15 on the RSI, like on the 4 hour. We did get down to, I think it was 11.5 there on that sell-off on Friday. So big move into the Swiss. New Zealand yen is extended to the downside. I'm not buying anything against the yen at the moment, not with the way that the US dollar yen is going. If that does continue to rally, we get any more positive news on the US dollar, they take that above 150 on the US dollar yen, that's coming down. So I'm not interested in buying anything against the yen at the moment personally, but it is extended a little bit on the 4 hour. New Zealand US is extended as well. Again, US dollar, we're getting more pressure coming into the US because you buy the US, the yen, gold, and the Swiss franc when you've got problems. And as you know, at the moment, we are in massive fear mode. So nobody's interested in putting any risky positions on. So you buy stuff that is stable. Well, according to the Fed, it's stable. So yeah, and the New Zealand dollar was obviously massively weak. We've broken out of this weekly low now. So we've been holding this level and holding this range for months, going back to August. We've just broken out of it, literally now. So either this is a false breakout, this is price discovery, which will fail. It will bring us back into the range, and then we will attempt a price discovery move to the upside, or we're starting a trend, in which case that entire move needs some kind of pullback at some point. So it'll probably go a little bit deeper and then pull back into this level that it broke out of, which we will have a propulsion gap at. There. So that's the level break. So if we can push down further, I'll be looking for a push back into there before we continue down again. So I've got 2 positions on this at the moment. If it does continue down further, I'll get a third on. But if this isn't really far enough yet, so if this now does pull back up into there, I think it's probably just going to come back up into that range and not go anywhere. And US dollar CAD. Again, I said about this one this morning, you can kind of take this one in any direction you like, really. US dollar CAD, they both move together. They both move on oil. They'll both move in the same direction when there's any buying on the US dollar, if there's any safe haven runs into that as well. So any extensions on this you can take, and you're highly likely to get out of them. So that's all of those. Indices trying to break south, aren't they? Apart from the NASDAQ. It's trying. Does look like, yeah, we're breaking short now. That's good. Okay, so downside. Initial place to watch is these pre-market lows. Can't see the pre-market low on that one. The pre-market lows basically are your first stop. We might find buyers back at the pre-market low That's where we bought from. That's why it's the pre-market low, because that's the lowest point we got to before the buyers took control. So we might find some more orders coming in there. NASDAQ is my target. S&P, I'm going further, and the Dow, I'm going further, because the price structure is a little bit different on these two. So yeah, we'll see where we go. But it's trying. Not very well, is it, though? Right, let me catch up on the chat. Jimmy, for us newbies, when you get a reversal alert, what do you then look at before entering? For example, Euro Pound 5 minute. Well, the reversal alert is a signal indicator. Yeah. So all this is a signal indicator. All it's doing literally is it's telling you the sellers have just taken control of the market. Yeah. So if the market is pushing in market structure, yeah, and you push down lower than the most recent low, you've broken that previous structure. So all it's doing is it's signaling to say shorts. There's people shorting it. So then you have to make a decision, and there's 1,000 ways to decide as to, do I want to jump on board with these guys? So I will be looking at, are we at the end of a rally? Have we got extended beyond our normal daily range? Are we at a previous level of resistance where they sold from? And is this why we've got the reversal alert? Because they're selling again, because that's what they did last time. And that's what they do. They repeat themselves. They buy from a level, it comes back to it, and they buy from it again, then they buy from it again, and then they buy from it, and they buy from it, and they buy from it. So are they selling from there? Don't know. A signal indicator literally has a 50-50 chance of being right or wrong. So you combine a signal indicator, whatever your signal indicator may be, in this case, a market reversal alert indicator, with a condition indicator or multiple condition indicators. So a condition indicator is something like an RSI. So this is telling you the market condition is extended or stretched. So after market gets stretched, it pulls back. Stretched and it pulls back. It got stretched and it's pulling back. So we were stretched. We got a signal to tell us that the sellers are coming on board. If we'd have taken that signal, we're in the money. There's no one way. If you look at the website and go to the market reversal indicator, there's a number of strategies. Actually, it's on this page as well, because that's the dashboard. But there's 8 strategies there. You can trade with it. There's top 3 strategies there that I developed and initially started using and trading. There's nothing wrong with them at all. They're all stop loss based strategies, and they all work absolutely fine some of the time. Some of the time they don't. But all you're looking for, and there's a video on the website again in here about what a system is. So go and watch this video about what a system is. There. Had to be the last one, didn't it? All a system is a coming together of conditions to say, press that button. The reversal alert indicator is either the first or the last part of your system. So either it is, I've got the market conditions are just right, I'm waiting for the guys to get on board so that I can jump on with them. Or it's, I've just had them jump on board. Should I get on board with them? Look at the conditions. So you either got the conditions ready and the signal indicator says now, or you get a signal to say now and you go, no, hang on a minute, I look at the conditions. Either way, a system or strategy is just multiple moving parts. So there is no one way. You could use the market reversal alerts indicator with Bollinger Bands if you want to. Stick some Bollinger Bands on your chart on the 5-minute time frame or on the hourly. So get onto the hourly time frame, wait for the market to go outside the Bollinger Bands, drop down to M5, and then wait for a reversal alert on M5. The same thing as waiting for the RSI to get extended and then dropping down to M5. Multi-time frame analysis. Or don't use multi-time frame analysis. Just get in when there's a market reversal alert and it retests and stay in until whatever. There is no, there's no system, strategy, indicator, anything out there that can predict the future. Everything that I create does is create a set of conditions we know that quite often produces a positive result. Whether or not, like stock index hedge EA, it's got a lovely edge, produces a lovely result long term. Some days it's just a piece of crap. It's not a piece of crap. There's nothing wrong with the indicator or the EA. The problem today is the market. It's just like that. Yeah, there's nothing you can do. There's no indicator on the planet that could tell you when to do anything because it's just a mess. So everything is going to be a mess with the market. So indicators, trend indicators work really well in a trend. In a range, they're awful. Moving average crossovers work really badly all the time. Forget that. Bollinger Bands work fantastically when you're in a range. In a trend, you just go short, 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 short. I've run out of money because you're trending. It's a mean reversion indicator. Doesn't work in a trend. Yeah. So it's just one part of a puzzle. But today, perfect. But also, I would say with this particular one, this is not a reversal that I would be particularly interested in because of the time it took to trigger. Yeah, so this reversal took, on a 5-minute time frame, this reversal took from 10 o'clock this morning until 2:40 this afternoon. Yeah, so it took nearly 5 hours for the market to actually decide. But what basically has happened is it's pushed up and it's got absolutely no direction. So what's this? Range breakout. It's nothing to do with a reversal. It's actually a range break. But how do you define a range? Pick 10 people, they give you a different answer. Nothing. There is nothing you can do, nothing you can look at in this industry that 2 people will agree on. So you use everything as you see it. If you see the reversal indicator being fantastic on one time frame for just getting in and getting out in 3 months' time with a huge profit, use it in that way. If you want to use it on M5 and wait for a Bollinger Band to get extended on a 4-hour time frame and just use the 5-minute reversal or the 15-minute reversal, do that. They all work, they all don't if you use a stop loss. But for position trading, I use it, obviously, as you know, for position trading with the market reversal alerts EA, and its purpose there is to make sure that I only get in when the guys that I want on my side are getting in. So if something's pushing against me and I've got a long, and it carries on pushing against me and I've got a long, if it carries on pushing against me, I'm not just going to get in because it's pushing against me. I'm going to get in when these guys are getting in because the banks are the ones that make the market move. So if the banks have pushed the candle up, I want to be in with them. I want them, the market reversal alert indicator, to tell me they're on board. Now I'll get in because I know I've got the guys behind me backing me up. It's like going into a fight. You walk up against a group of 10 blokes and you go, right, boys. Oh, you're dead. Yeah, if you've got 20 guys behind you, the banks, you've got half a chance of winning, haven't you? So that's what the indicator does. It shows you when the structure is shifting back inside of the opposite party. Nothing more. Doesn't tell you. Same as ADR. I get people. I mean, I understand why people do it, but I get people saying, with ADR, why has the ADR indicator not given a successful signal for 3 days solid? I've taken every ADR reversal that I've been shown. I'm trying to find some ADRs. You're in New Zealand. Every ADR signal, none of them have worked. Why? Well, because this isn't a signal indicator. This is a condition indicator. It's telling you the market is stretched. Yeah. There's 2 things that can happen when the market gets stretched. It either goes like that or like that. Yeah, it can go like that, but most of the time it will go like that or like that. So if it goes like that, it's not going to work, is it? Because tomorrow it could do that again. Push up. Push up. It can do that tomorrow. Yeah, it's a condition indicator. It's telling you that the conditions today are beyond normal daily range. Nothing more. It's not a signal. It's a market condition indicator. In the same way as the RSI shows you there's more relative strength to the upside than there is to the downside. Doesn't mean it's coming down. It's telling you there's more strength to the upside. We know that when we get extended like this, there's a big chance that we'll do that because the banks and institutions will want to take profit on the moves they've created. It doesn't mean they want to do it now. They might want to do it next week, which is why stop loss strategies, most people find fail, because if you put a stop there and it goes like that, you lose money. If, however, it pushes up for 3 days and then collapses back down to here, that was a successful signal, wasn't it then? You probably had a couple more and you got out. But the reason you lose money is because you put an entry in the market to get you out with a loss. And all signal indicators will have the same thing. Any signal indicator you use. Bollinger Band can be used as a market condition and a signal indicator. So when we get extended beyond the Bollinger Band high, it means that the market conditions are stretched to the upside. It's not signaling anything. It's telling you that. And it can stay up here above that Bollinger Band. But when it breaks below the Bollinger Band, that is used as a signal to go short. Yeah. So it doesn't mean it's going to go down to the mean, which is what most Bollinger Band reversal strategies are. They're mean reversion strategies back to the mean. What that would require is a 50% retracement on the move. We quite often get a 38% retracement on the move and a new leg up, which means that Bollinger Band strategy signal fails. Sometimes it works beautifully and it comes back to the mean and you're like, this is amazing. And it will do that 10 times on a trot. 10 times on the trot, it will also do that and never stop, and you'll lose 10 times. Just a signal. Everything is a flip of a coin. It's random. It will either go up or down on every single candlestick. And there's no indicator like this one here. Yes, the sellers have taken control. But what's to say the buyers won't take it straight back? Yeah, there's $20 million going long here, and there's $10 million that made that move happen. That thing's going up. Doesn't matter if there's an orange block and it goes ping. Nothing to do with anything, is it? It doesn't tell you what's going to happen in the future. It tells you what's just happened in the past. Same as all indicators. Every indicator lags price. But price doesn't give you any clues as to where price is going next either, which is what everybody says. You use indicators, or everybody, the naked chart traders go, oh, indicators are crap. They're useless. And I will always turn around to them and say, yeah, I know, but your naked charts are crap as well, because what does that candlestick tell you about the next one? Well, it was bullish. So what's the next one? I don't know. Sorry. Why are my indicators crap? Your candlesticks are just as bad, aren't they? Yeah. Nothing would predict the future. So what you're doing, Mr. Stop Loss Candlestick Naked Chart Trader, is putting an order in the market to lose money. I'm not. That's the difference. The indicator, the candlestick, is irrelevant. Sometimes they'll give you clues, like here. This is a beautiful short. Only because of those 3 wicks or 4. Yeah, that's telling me that no matter how much I try and buy it, I can't. I'm going to try again. I can't. I'm going to try again. So for an hour, I've been trying to buy this thing and I can't get through there. If I can't get through there, what's my option? Go the other way, because that's the way that everybody wants to go. Yeah, so there's clues in the market. But again, 3 wicks to the upside doesn't mean it's necessarily going to go down, because these people that were buying here might turn around and go, HSBC, I can't get through this level. Here, 20 million order I've been saving up. Do you want to get through now? Yeah, brilliant. Bang. Thank you very much. Here's your cut. What goes on in banks? All sorts of stuff. Which means you've got no chance, have you? There you go. There's a quick analysis on indicators that work. You can clip that one. Same thing, wicks, bodies, my God. Yep, God, he could well help you. That's pretty much strategy I wrote to you about, isn't it? No. I don't know. What strategy did you write me about? Yeah, no, that was that trend thing where you, yes, no, it's not that, no. I know what you mean. Just trying to pick, AZ, that's not your name in email, is it? I have to put multiple things together when people talk to me in here, because everybody's got a different name in Telegram, and then they email me with something completely different as well. No, that strategy doesn't, well, I'm not going to say it doesn't work. I built an EA to backtest it. I couldn't get it working, but then I probably executed it wrong. Dow comes down fast. Yeah, so got a good sell-off on the Dow now. We're below the pre-market lows. So close to TP, the level that I'm looking at, which is this low here. So going to watch for a bounce down here. Hopefully, which is the thing that worries me about this one is it's so far away from ADR. But the fact that we've been going sideways for such a long time, I think they will probably buy this level up. They're certainly buying out this propulsion move at the moment before we get there. So we'll see. I'll have to have a look at that strategy again, AZ, and see. I basically built a quick EA to test that strategy using lows, and it didn't work. It did work. That's not true. It did work. But what it did was it blew the account eventually. Reason, how can I explain it? So if I remember rightly, you were in a trend and we were mean reverting into a trend. If it went like that, we short it, we hedge it, yeah? And then you take some profit off at some point and then come back, yeah? And you'd have to take a long position there. Otherwise, you'll never get back to profit. Problem is, and if you build an EA to test this, you'll discover this, but it's not obvious when you're doing the strategy. If you get into 4 or 5 positions, it's fine. Every single one of these is a martingale position, though. Has to be. Because if you go one lot long and then it doesn't work out and you go one lot short, when you take off this one lot short with a profit, you have to get back in with another long because you've got to average in to be able to get out, which means you go one lot long. If that doesn't work out, you have to hedge it again. Now you have to hedge it with 2 lots short. So now you have a martingale situation. If that continues down and you take that off and go long again, you have to go long with another lot to bring the average down. So you're now 3 lots long. If that fails, you have to go 3 lots short. Do you see what's happening? Our lot size incrementally increases. Yeah. So in my back testing and modeling on it, you got to a point where it looked really, really good and then it went because you couldn't get the lot size on. You'd have to use a very, very, very tiny lot size to start. And even then, you'd still be getting up into the 20, 30 lots if you were starting with 0.1s. But I don't know that. I might have executed it completely wrong. But that's what I understood it to be. And it just didn't work. So I'll revisit it. It's still in my inbox, to be honest. It's one of those things I kind of bought. I did something with and then didn't. I do that a lot. What is oil doing right now? You probably asked this question about an hour ago, but it's pushing up. I'm long. Initial target back up at these highs, but we're looking at $100 a barrel potentially by Christmas, depending on what happens with the war. I'm going to give a try to the S&P pullback. We'll do it manually with a stop loss. Yeah, so if you want to do it manually, you don't need the market reversal alert EA to execute that strategy. But all I would say is at the moment, yeah, look at the normal market conditions for the S&P. Yeah, normal market conditions for a year in the S&P. Look at what we've just had, and look at where we are now. I was on the verge here of turning this back on again. And the reason I didn't was because it was summer trading. And I thought, well, there's no point in putting the EA on now because summer trading is going to contract and we're going to go sideways. What happened after summer trading was we didn't actually recover. So this looked like we were starting to get back into full calm territory and off we go. What we've actually got is another drop. You know, this is not normal in a bull market to be falling down this far, and you know we're not doing well. But the reason is because we've got so much volatility. We're kicking off with another potential war in the Middle East. Stock market's going to collapse. Stocks do not go up in wars. So I'd be careful with it. You know, buying the dip in a bear market doesn't work because it just comes down. So just be careful with it. I'm not trading it at the moment. I haven't been trading it since back here. I haven't traded it. I said, if you go back to the live stream in January 2022, 3. This year, isn't it? 2, yeah, sorry, January 2022. If you go back and look at the live stream, I talk about that strategy a lot, because what went wrong this year, which doesn't normally happen, is we didn't get a Santa rally. So we normally have a rally in the stock market in December. We didn't get it this year. We did, but we didn't. So if you look at where December started, which is around here, what we normally find is we get into the second week of December and we go bang, bang, bang. What we actually got was bang, flop. That's not normal for December. That was the first alarm bell. Came back in January and we were like, what the hell's going on? We don't drop in January, and then we collapsed. So I turned it off. I took a loss on that position. I bought the dip and then I said, nah, this is not right. And I stopped. Then we went into bear volatile market and we started getting big ADRs. The ATR increased and we went into the bear volatile, which we haven't had before to this extent. So I haven't used that strategy since here. I used it all that year. Beautiful. It makes way more than 10% a year, way more. But with higher risk. Yeah, I'm not doing Warren Buffett trading because I haven't got Warren Buffett money. So I'm over leveraged compared to what he would be. But it's, and you know, this is where we were looking at, oh, look, and you can tell by, these moving averages, the monthly, quarterly moving averages tell you when we're in bull bear markets. We went bull and then we were like, holy crap. We went bull again. We were like, we've broken the high. This looks like it. Oh, crap. And it's like, I remember myself saying it like here, this is like a spluttering car, right? Why can't this market get going? What's wrong with it? So we sat sideways for 2.5, 3 months. And then we finally broke that high and we were like, yes, we're back in a bull market. And then it collapsed. And then it made a new lower high. And then we've put in a lower low. Yeah, we're going back into bear. We're not in a bull market, I don't think. And that strategy is a bull market only strategy. It's a long only strategy. They will not work if the market's coming down, because you just go long, 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 long. Holy crap, pop. That's exactly what happened. Test it. Go and test that set file. Start it January 22 and see what happens. Won't work. So you've got to identify you're in a bull market. We need the US dollar to be dropping interest rates. We need the rest of the world to start following suit and dropping interest rates. We need the wars to stop. And we need that will kick markets into a bull run. None of that is happening at the minute. And every time it starts to happen, it stops. So just be careful. I almost would say flip it on its head and do it the other way. I'm not got any faith in this thing. It took such a long time to make a new high on this S&P, and it's just not getting there, is it? Is it complicated to customize a dashboard or a preferred indicator? That's a question. That's like saying, are you a good footballer? Yes, it's easy to customize a dashboard for a preferred indicator if you're a good coder. If you're a crap coder, no, it's hard. If you wanted me to play professional football, you're going to be struggling a little bit. There's plenty of coders out there if you want a dashboard made, though. That's why we have wild swimming. Yeah. I don't know why we have wild swimming, Brian, but I was probably talking about something. Not quite sure what I was talking about that would get the wild swimming comment out. I didn't mention his name, did I? Jimmy, as a newbie, I don't have that past experience to rely on. Yeah. Of course you won't. I didn't have it. Do you think every account I've blown in the past, I've blown because I didn't have experience. Every time I blew an account, I knew why I blew the account, and I didn't blow the account for that reason again, but I blew it for a different reason. So then you go, I'm not going to do that. I'm not going to do that. I'm going to do that. And that is what this document is about, which I keep showing in here. But this is the journey. You have to go on this journey. You don't, there is no that to that. Yeah. You can't do that. You have to start there. You have to go there. You have to get that. You have to do that. You have to get knocked back to there, step back to there, and then jump over to that. That's the only way you will ever make it as a trader. Yeah. Every single one of these moves is conscious incompetence. And that is usually the account blowing cycle. You will do it 3 or 4 times and then you'll go, I get it. None of this works. And then all of a sudden you'll be like, I see why everything's been going wrong. And it could be different. It's different for everybody. Why? The why is different for everybody. It depends what strategies you've been doing through this blowing cycle here. But then you get to the point where you suddenly got it and you go, I'm going to increase my lot size and I'm going to grow my account. And then you blow it again and you go, I just can't increase my lot size. I've just got to accept I'm going to make 5, 10, 15% a month and I can't make any more. That's when you suddenly go onto autopilot and you just do the thing you need to do to make money in the market. But you realize you're not going to buy a Lamborghini because you haven't got Lamborghini money. If you had Lamborghini money, you could make Lamborghini money. But if you had Lamborghini money, you'd have a Lamborghini and you wouldn't need Lamborghini money. So therefore you can't. And that's the cycle that everybody's stuck in. I want to earn enough money to buy a Lamborghini. You can't, because to do that, you need £1 million. Because unless you can have £1 million, you can't take enough risk to make £250,000 every month, which means you could buy a Lamborghini. Cycle. You're in it, you're stuck in it, and you'll never get out of it until you realize. Unfortunately, and every single one of the lessons is I realize I can't get a Lamborghini with that. I realize I can't get a Lamborghini with that. After you've done that 5 or 10 times and you've burnt 25 grand of your money, finding out that you can't earn 250 grand with 25 grand, you suddenly go, okay. You step back and you realize everything you've been doing is working fine. You've just been trying to get a Lamborghini with it. It's a horrible, horrible business. Very, 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 very difficult to crack. Me stupid sold the DAX when I wanted to sell the DJ. Well, the DAX should, it's not doing quite as much as the Dow, is it? But the DAX should do similar. Obviously, we're in the US session, so this isn't going to move as much as these three, but probably do the same sort of thing. Look at these wicks. This is yesterday all over again. Look at these wicks. This is a horrible, horrible thing again today. I'm not far away from getting out the Dow, though. I really don't like this. It's too close. I'm a bit worried about this one. What I don't want to do is exit here and it collapse straight down into that low, because that position is going to go into twice as much drawdown as I want, which is going to cost me. But I've had a good month so far, so I can afford a little bit more risk, but it's a very risky trade, that exit, because it's a bit close, but we'll see. See where we go. What's the time? 4 o'clock. I've got to go out in 15 minutes. So the strategy was essentially enter and exit on price crossing and closing above or below a moving average. You stay in all the time. It's only on growth stocks. Oh, it's not the strategy. Oh, you're not who I thought you were then. I don't know what you're talking about then. Yeah, I don't know. If it would, to be honest, if you mentioned the word stocks, I probably wouldn't have even looked at the email, because I don't trade stocks. I don't know. I'll have a look through my emails again. But this strategy that I've tested here is an old strategy, but I've tweaked 2 things in the strategy that I think are what didn't work, and it looks like that is what I thought. I would never make this money because this is stupid high risk, but I wanted to see what a 100 grand account would turn into on an aggressive mode, and it does that. But it will blow. It won't. This is only a year back testing. Yeah, when I stick this over 5 to 10 years, that won't happen. That will go pop. But with a lower risk, it will work across multiple instruments. So, but yeah, it's a different. It's an old. strategy taught to me by somebody years and years ago. Again, it's a Forex factory one. And using moving averages. And I dumped moving averages, which is why I dumped it, because I dumped moving averages. And I didn't get hedging at the time. I now know a lot more about hedging. But it needs a lot of work still. I don't know. It might work. It might not. We'll see. If it does, I'll let you know. This is awful. Look at it. So basically today, that pays for that. So I'm looking at 2.5 loss today. If we don't go anywhere, which at the moment we're an hour and a half into the session, Dow's got a chance of hitting target. The rest of them is going to take a while, isn't it? If it gets there. So not holding that much hope. I'll post in Telegram the results, and obviously I'll show you tomorrow. But I don't think we're going to get anywhere today. I think it might just turn into a lost day, unfortunately. We need a banner on your desk, chart top, saying bear or bull market. I don't know what a bear or bull market is, Virginia. The problem with that is, right, and this is the age-old question. Is that trending or is that range bound? Yeah. Rudra, I can see you. US dollar CAD, please analyze. I've already done it. I can have a look at it. I'll look at it now. Here you go. We do it now. Is that trending or is it range bound? Yeah. Gopher is pushing. Which one was that again? Gopher. Is that the US dollar yen? I can't remember what Gopher was. Yeah. EAJ, yeah. Gopher's pushing. If I put a message at the top of the screen saying bull market or bear market, right, all that will happen is a load of people will disagree with me and a load of people will agree with me, because the definition of a bull or a bear market or the definition of a trending market or a range-bound market are 100% dependent on what you think. Do you think this is in a bull market at the moment? You could say yes, because it's green, which means we're above the 72 and the 24 moving average. Whereas I would argue the fact that since we made this high back in September, all we've done is stay in a range. But then you'll say, well, no, the market structure is long. And I'll say, yeah, I agree with you at the moment, but it looks like we're making a lower high. Everything you say, someone is going to have the opposite opinion. Because that's why this thing moves up and down. Because if I say it's a bull market and someone else says it's a bear market, unless somebody says it's a bear market, I can't be in a bull market because I've got nothing to buy. I need somebody to sell to me. So, you know, the S&P 500, is it in a bull market or a bear market at the moment? You look at that and you go, this is definitely in a bear market. You look at that and you go, this is definitely in a bull market. Bear market, bull market, bear market, bull market. I can see both. Yeah. Right now, this is massively bearish. No, it's not. It's a pullback on a long. See what I mean? I don't know what we're in. No one knows what we're in. That, and this is the problem with trend trading, that 100% is a bear market. When did we realize we were in a bear market? Probably about here. Because when we dropped, we were like, oh crap, this is a big pullback, isn't it, in our bull market? Then we were like, hang on a minute. This looks like it might be turning into a bear market. We need to confirm that. Oh, we've made another high. Oh, we're back in a bull market. No, we're definitely in a bear market. It took 4 months to realize. This is the problem with trend trading. You don't realize you're in a trend until the trend is really there already. By the time the trend is there, you're ready to get out of the trend. You've missed it. That's why trend trading doesn't work. Then all the trend traders say, yes, it does, because I've made X, Y, Z. What are you doing in here then? US dollar CAD, sorry. It's, I don't know what you want to say. It's pushing up at the moment. It's not actually, it's going nowhere. It's not going anywhere. I can't answer the question, analyze it. For me, at the moment, it's going nowhere. There's no signals to go long or short. It's just broken out of a high, which could well hold, and it will push up into that high. But this could be a false breakout, and we're going to come back down and retest these lows and form a range. I don't know. But right now, all day, it's just been going sideways. So you literally just don't want to do anything with it, do you? All the targets are the downside. Yeah, down. If oil rallies really hard on the war, down. Don't know. It's not doing anything. You should have a system or a strategy that tells you what to do with this. Right now, my system is telling me to do absolutely nothing because we are just sitting in here. So there's no signal for me to do anything with this. Your system or your strategy should tell you. This is what analysis is. What I think has got nothing to do with anything. I think it will go there or potentially do that or come down into here. That's what I think it's going to do. I don't know which. If I knew which, I'd do it, wouldn't I? I don't know which it's going to do. Those are the three options I can see right now. But tomorrow, when those retail sales come out on the pound, this is the CAD, isn't it? US dollar CAD, sorry. We haven't got any US dollar CAD news. We've got retail on the CAD. So when that retail CAD figure comes out tomorrow is massively bullish, this will come down. So then it's a case of, will we get a bounce there or will we push it all the way down into there? Your analysis is going to change every day. So you need a strategy or system that tells you what to do. Lamb, US dollar. Lamb? No. Just to ease my mind, I heard something about a new strategy that may replace position trading. No. No, I won't change anything, David. I'm not changing anything. I'm just looking for things that may be a little bit more resilient longer term. That's all I'm doing. So I've got another strategy which is more swing. It's not, I mean, it's day one looking at it. So don't get excited. I've had a lot of day one strategies which get thrown away. But I'm looking for something. Position trading is H1M5. Stock index hedge opening range breakout is 5 minute stock indexes. I'm looking for something longer term, higher time frame that I can use to generate long-term alpha because my S&P strategy is not running anymore at the moment. So I'm looking for something that works on 4-hour and daily time frames, which is not position trading based, because position trading on high time frames, by the time you've got that extension in, it takes an awful long time to get out of things, and squeezes can last for months with 2 to 3 positions. It just doesn't suit position trading, in my opinion, on the high time frames. So I'm looking for something non-stop based, which is a swing strategy, and it's got to be hedge related, really. That's all I'm doing, as I'm looking for something to add, not to replace. But if my testing shows that actually there's not a lot in it and I can earn as much money doing it, then yeah, I might say, right, well, let's draw the capital out and do that. But what I would always do is do a little bit in between, do some live testing with a small account, see how it goes for a few months. And if it pans out as the back testing has shown it should do, then put more capital into it. But like all the banks, I haven't got an endless amount of capital. So I've either got to pull some out of position trading or I've got to pull some out of scalping. And at the moment, scalping is brilliant. So I'm sticking there. With the SIHEA, you have 3 pips offset. I am testing 6 pips. The tester, I am hedge a lot less. What's your thoughts on that? I haven't tested it, Peter. But if you're saying, I can quite well believe that. So today, for example, if you had a 6 pip offset, you would not have got hedged there, and you wouldn't have got hedged on the S&P, would you? So yeah, I mean, it may be better. It's designed to stop double tops, but how many times it pops its head out, I don't know. I've never tested it, but yeah, I mean, if you offset further, the downside is you've got to go further to get your risk reward. That's the downside. But in the grand scheme of things, if it's going to break, yeah, it might be better to use a wider offset. I've not tested. It's one of the things I haven't tested. So yeah, you might be onto something. Come down. We hit in the bottom of the Dow. Buyers seem to be back in. Yeah, just saw that. So we're coming out of this propulsion gap. If it wants to do that, fine. If I exit here, the danger, the problem with exiting on a pullback, yeah, is it is exactly that. Yeah. So if you go, right, screw it, I'm getting out of my shorts because it looks like it's going long. Yeah. If you get out your shorts here, and this is a pullback short, all you're doing is you're exiting the position that is going to make you money. What I would rather this do is pull back, put in that second leg, then hit my target, because then it will be ready for another pullback, which I can exit on. If you exit here and you're thinking it might do that, if it does the opposite, what you've just done is got out far too early on the thing that is actually going to make the profit for you today. You're better to sit on this and wait. It's either going to be a rotation day and it's going to be a loss and you're going to take the loss, or it's going to be a trend day. It's just taking its sweet time to start. And if it's a trend day, you're going to get out on one of those pullbacks in the trend. But you want to get out when the trend has done a bit of legs so that it knows it, because you're going to get those pullbacks coming in. See what I mean? If it's a rotation day, it's going to do that. You're just flipping a coin and hoping at that level. To me, what we've just had is a market structure break to the downside, which shows me that potentially, as there, we're starting a downtrend. I don't know. It could be either, couldn't it? That's trading, isn't it? Yeah. Got to have two opinions on something for the thing to move up and down. Have you taken much drawdown on the New Zealand dollar pairs and UJ? Not a lot. UJ, no drawdown control. No, not on any of those yet. Not yet. They're not stretched enough yet. Right, that's all I've got for you today. Finished off the chat. I'm going to do some more testing. I've got to go out though in a minute. So, you know the plan on these. At the minute, these are the days you don't make the money. There's nothing you can do with it today. It's just a complete mess. I'll test that offset idea. That might be something worth looking at, the offset on. Why has that got 10? No, that's right for the S&P. Yeah, I mean, it's something worth testing, Peter. Going if you're getting less hedges with it, it's worth investigating further. But yeah, I don't know. The other thing you've got to bear in mind is it working off the 5-minute opening range or the pre-market? If so, that pre-market is going to be different every day, isn't it? And the pre-market is only forming a range based on what we've said it should be. So in this case here, for example, today's Dow, if you look at the Dow today, right, the opening range or the stock index hedge EA chose the 10-minute pre-market range because it fell within the min-max range. If you actually look at what happened today, it actually used the 30-minute pre-market range as a resistance. So if you'd have actually used that pre-market high, your offset would have been fine. But because we used the 10-minute high today, we didn't. If we'd have used the 15-minute high, that probably wouldn't have triggered. You see what I mean? Every time you do a test and you go, that's better than that, unless that test gives you a definitive, that is better than that edge over a period of a year or two, it's no good. If you test it over 3 weeks and it's like, well, if I'd have just used that little bit more the last 3 weeks, that's not long enough. You've got to test it over a long period of time. So you'd need to test it over a big distance and say, you know, I mean, again, this is where it comes down to using your head, doesn't it? Realistically, what we should have done today, now in hindsight, is go, well, obviously it needs to be above that high. We were so close to the pre-market high at the open, it made total sense that it was going to touch the pre-market high and reject, because that's what it has been doing all the way up to the open. Hindsight is bloody obvious, isn't it? But we don't have hindsight at the hard right edge, do we? Every time you see something and you go, that's better than that, there'll be instances where it's not better and you should have actually done it the other way. There is no better. It's just different. But it's worth testing. Coming down again, new leg starting. So we might get out of these if it gets out of this low. Yeah. I mean, struggling in it, but it might get out. So we'll see. All right, I'll leave it there. I'll be back tomorrow at 2:20, same time as usual, and tomorrow at 7:50 for Frankfurt session. We'll trade the DAX again. Overnight news, nothing to worry about tonight. You've got some China news coming out. You've got the New Zealand statement, which probably won't do anything, but we have got retail sales pre-market tomorrow for the pound. So the pound will probably move nice, fast, hard move before the market opens tomorrow morning. So just be aware of that before the Frankfurt open, specifically for your pound pairs. Fingers crossed we get some decent retail figures. We just had decent retail figures in the US. So hopefully we'll get them for us as well. But we'll see. So yeah, we'll see where that goes. There's the US ones that all came out very much higher than expected. So we were expecting it to be a drop. So good chance of a rally tomorrow, I think, on the pound, but we'll see. Other than that, keep your eyes peeled for anything to do with Israel and the invasion, which obviously is going to affect everything. So just watch that. All right. Have a good evening. I'll be back tomorrow morning, same time, and tomorrow afternoon. Anything you need, I'll be in Telegram. Other than that, I'll see you guys tomorrow. Have a good day.